As the longest spring in memory finally gives way to summer, it's nice to get out and enjoy the sunny weather. However, there continues to be uncertainty about the shifting mortgage market. Here are our most common questions answered.
Should I break my fixed mortgage to get a lower rate? If you're only partway through your fixed term, you'll need to pay a penalty to break your mortgage. But we're finding that if you have a higher interest rate, over 3%, then the savings by locking in at today's rates usually outweigh the penalty. Locking in a low rate now can be a strategy to provide some safety in an uncertain future, and you may be able to save money over the long term. Also, we can usually add any penalty into your mortgage so there's no out-of-pocket expense for you. If this is a question that's on your mind, let us know and we can complete a mortgage review to see if it might make sense.
Can I refinance my mortgage to deal with high credit card balances? If you have more than 20% equity in your home, you may have the option of refinancing your mortgage and roll all your debts into a new low-interest mortgage. You can get immediate cash flow relief and one manageable monthly payment.
What about my mortgage renewal? A lost job or drop in income will be a factor if you want to move to a new lender for a lower rate. You can renew with your current lender at their best offer, or use an open mortgage for a few months with the plan of moving to a lower rate closed mortgage without penalty as soon as your finances stabilize. Regardless of your situation, start planning early to avoid any last-minute decisions.
Should I lock in my variable rate mortgage? If you have a deeply discounted variable rate mortgage, you are in a very good position given the recent drops in prime rate. Variable mortgages can be converted to fixed without penalty, providing long-term peace of mind knowing you have security for the next 5 years. While the rate environment remains in flux, we feel it is best to enjoy your lower rate for now and reevaluate in 6 to 12 months.
Should I take the mortgage payment deferral that is available? The immediate relief is compelling, and if you need it, please take it. However, make sure you understand that your lender will add the interest accrued during the skip period to your outstanding balance, thus increasing your mortgage amount. Maybe borrowing from a line of credit is an option for you, making interest-only payments until the financial stress begins to ease. Other options include extending your amortization or moving away from accelerated payments to lower your monthly cost.
Should I choose a fixed or variable mortgage rate? The answer depends on you, your tolerance for risk, where rates are expected to go, and personal preference. Variable rates look attractive on the surface right now, but with a low prime, they are not being discounted like they were 6 months ago. Once the prime rate recovers, you could be paying significantly more. Fixed rates, however, are very low, down to 2.29% on a 5-year fixed, and are an attractive option for many borrowers.
More good news is that the Bank of Canada has lowered their qualifying rate to 4.94%, which is the rate used in stress tests for mortgages. A lower rate means it's easier for borrowers to qualify. This is the lowest the stress test has been since it began in January of 2018. Find out how much you qualify for, or let us know if you have any questions by emailing us at any time. Bye!